Hello, everyone. Let's analyze gold a bit together. Here you can see this is the daily candlestick chart for gold. And what do we notice in the daily candlestick chart for gold? We can see that in the daily candlestick chart for gold, there's a structure known as a waterfall or slope pattern. And we can see that as it dropped down to this point, it has held this area quite well. Since gold dropped all the way down here, we can see that this support zone is quite strong. And several times when it came down, it couldn't break through. However, if you take a moment to pay close attention, you will notice that on the daily gold chart, the highs are getting lower, but the lows are not following suit. So this area is its strong support zone. But we can see that when it dropped to this area and then went back up, and it still couldn't surpass this high. Next, it experienced another significant downward movement, then went back up, but still couldn't successfully break past this previous resistance high. So what exactly do we see here? We can clearly see that its upward momentum is starting to weaken on the daily chart. And now you can see it continues its rise to this particular resistance area, but it still hasn't surpassed this previous high. So here we can see that the upward momentum of gold on the daily candle is actually quite weak, and its highs are gradually decreasing. And let's take a closer look at the 4-hour chart. Now, what exactly do we see on the H4 right now? If we examine it very carefully, what do we notice? Right in this specific area, we have a very clear high at this point. All right, we have a high at this point and another high here. And here we have a low, this wick right here. And if we draw a line from here across, if we draw a horizontal line from here across, then right here is the low. At this spot, we see a high. This wick is also a high, but it hasn't reached this point yet. And we can see it moves up and touches its resistance zone. When we draw a line here, what kind of line do we have? We have a zone called resistance. And gold moved up to touch the resistance zone and formed a doji candlestick indicating a trend reversal right here. Next, you can see a pair right here. This is a pair of pin bars. What does a pair of pin bars indicate? And before that, we saw gold rise from down here, from 4,028 up to 4,120. It touched the resistance zone and reacted with a doji candle signaling a trend reversal. And over here, there is another significant pair of pin bars indicating a reversal. And if gold closes this candle as a bearish candle, we can likely expect it to retest the 4,025 zone. And if it goes deeper, it could drop down to the 4,000 zone. But let's pay a little attention here. Looking at the chart here, we can clearly observe that on the daily or the H4 candle, its bullish momentum is starting to show signs of weakening. In other words, if we look closer, we can see that its highs are still consistently forming lower highs. It goes down then up, but still can't surpass this high or that high. And this time, even as it goes up, it still can't break this high. So in the structure on the H4 or daily candle, it's still currently forming lower highs, which suggests that its bullish momentum on H4 or H1 is quite weak and really not strong at all. So the probability is high that it will come back to retest this lower area, meaning it's likely. At this point, if the current H4 candle closes as a bearish candle, if this one closes as a bearish H4 candle, then we will open a short position on gold at the entry point of 4,100 to 4,120. And we set the stop loss a bit higher, not just at this specific wick, but safely above this entire resistance area, right at this wick here. All right, if we look at this area, it's just a false breakout. Isn't that right? It pushes up with a green candle, then pushes down with a red candle. That's a false breakout zone. So at this point, if it were me, I would split the orders like this. We have to wait for this candle to close as a bearish candle. Then we open an order at 4,100. The second order at 4,120. And where do we set the stop loss? Where do we set the stop loss? Above this peak, which is $4,145. But what do we have to wait for? Wait for gold to close this candle as a bearish candle. This confirms a complete trend reversal for gold. What this means is that we already have a clear trend reversal candle, which is a doji right here. We have a pair of trend reversal signals here. Now we just need a strong enough confirmation candle from the sellers, and it could completely retest this area, 4,025 or even deeper to 4,000. So here we will wait. If gold closes with a bearish candle on the H4 time frame, we will enter our orders at 4,100 and 4,120 with a stop loss at 4,145. The target is at the 4,025 area and the 4,000 area. And we can see here that this is quite a strong support zone. So it's entirely possible that when it tests this lower area, which is somewhere around 3,970 to 4,000, that's the area where we will open a position. For example, if it drops to 4,000, we will open a long position again. And if it continues down to this area, 3,970, we will open another long position. At that point, we will set our stop loss below this wick. That's around 3,940. That's the point where we will open a long position if it drops down here. So now with gold, we will wait for it to retrace to this area. That means if this candle closes as a bearish engulfing, the probability of it coming down here is very high. We will open a short position first, and then when it reaches this area, we will open a long position for gold. Now, on the H1 time frame, it's clear that it previously formed a bearish engulfing candle right here. After that, it tried to retest the resistance zone, but was unsuccessful. This means it's quite weak, meaning the bullish momentum for gold to return to this resistance zone is pretty weak. So now we wait for the H4 time frame to open a position. On the H4 chart, as long as it closes with a bearish engulfing candle, then 4,100 and 4,120 are the zones where we will enter. First order at 4,100, second at 4,130, cut loss at 4,145. And we take profit down here. That's right, because this is where a reversal candle is forming. If we wait for the H4 to confirm another bearish engulfing candle, then the probability is very high that it will go down here. We open a short position in this zone and split it into two gold trays. And when it comes down here, this is quite a strong support zone. So we can absolutely consider opening a long position around 4,000 or rather 3,970. And we set a stop at the 3,940 zone. That's my gold trade setup. For the short-term trade, we need to wait for the H4 candle to close. Then we open a short position. And then what? After that, we watch for an ideal opportunity down here to open a long position. Because gold is currently forming a consistent structure of lower highs on the H4 and daily candles. And we can clearly see that it still hasn't shown any real strength by forming higher highs. Instead, it is simply continuing to make lower highs. So we'll be watching somewhere around the 3,970 to 4,120 zone. That's the area where we'll open our positions. Because gold will continue to move within that range for quite a long time. So that's the zone where we'll open either long or short positions. That's my analysis of gold for tonight. If you found this helpful, please give me a follow and click the notification bell to receive my new videos every day. Goodbye, everyone.